China is doing something that it has never done in the past. Right now, China is actually printing hundreds of billions of dollars and throwing it into the economy. Maybe it will even print trillions of dollars. And the only reason they do that is because they're so freaked out about the economy that it probably collapse in the foreseeable future. If you have watched the news, for example, you have probably seen that there are a lot of stimulus packages that have been created by the government of China and been thrown to the stock market in China. And that's why if you take a look at one of the main stock market indexes in China, you will see a substantial rise. Such a rise doesn't happen just for no reason. It happens because the government has actually thrown so much money into the economy. You can even call it that China right now is going through the exact same thing that the United States went to in 2020. Remember when the Fed and the government just printed trillions of dollars and just flooded the market with so much money? Even the companies that don't need that money, such as Apple, Microsoft, Amazon, probably these largest companies out there benefited the most from the printing machine. And now the exact same thing is happening. And that kind of drives you to ask yourself a very simple question. Wait a second. The pandemic is over. The world has went through 2 years of lockdown, and starting probably from 2023, the world started opening up just like it was before the pandemic. What exactly has happened to China that in 2024, they are printing so much money and they're pledging that in 2025, they will keep printing hundreds of billions, probably trillions of dollars? That's a very good question to ask yourself. And that's one of the reasons behind China's economic collapse. Now, in order for us to take advantage out of it, because if you kind of paid attention, there are a lot of hedge funds, a lot of financial institutions in the United States that are trying to get into the Chinese market and buy some of these Chinese stocks. Because you know what happens to the stocks when the government floods the market with cheap money? Those stocks actually rise. So it's a pretty good opportunity for the Wall Street, for the hedge funds, for everybody who has the money to actually jump in and make some quick cash out there. Even if you make like 20% in such a short period of time, why wouldn't you do that? Now, most people, for example, around the world, even in the United States, do not have access to the Chinese stock market. So most people will not benefit out of that growth. But even if you take a look at the Chinese companies that are being traded in the New York Stock Exchange, such as, for example, Alibaba, you can see that the growth has been substantial. There's probably like a 25% growth, maybe 30%. And a lot of people know about the Alibaba, but Alibaba mostly operates in China. But because it's being traded in one of the, or probably the largest stock exchange in the United States, it has benefited from the rise in China, but a lot of people in the United States have access to the Alibaba stock. Now, a lot of people are wondering if that's enough to save the Chinese economy, because the Chinese economy is in a real trouble. And I know that some people will actually call me in the comment section that you are spreading propaganda against China. I'm not. The fact that the government has to print so much money and throw it into the economy is a clear sign that the economy is in trouble. I'm not saying that tomorrow the Chinese economy is just going to collapse and China won't exist starting from next day. That's not what I'm saying. What I'm saying is that the economy is in such a trouble that even at this point, the Chinese Communist Party realizes the danger of the problem, and they know that if they are not going to act, things will get out of control. And throwing so much money into the economy is a very dangerous move. It's not like you can simply do that anytime you want. Just look at what happened to the United States. When the when the United States did something like that, look at inflation in 2022. It has grown to like what? 9%, 10%, 11%. Now, it really depends on how you count it, because when they are usually counting with the CPI and they don't include house prices there, they also don't include energy prices there. So if you actually include both of these factors as well, I think inflation was way above the 9% rate. And that's why the Chinese Communist Party does not want to do anything like that. They don't want to play with the economy. They don't want to play with inflation. They don't want to play with their currency. They want to be very, very careful. And that's why in 2020, when the US was printing so much money, the Chinese government on the other side wasn't really printing that much money. They told their people that, calm down, we will go through it. yes, you're in trouble, please use your savings, please somehow rely on your family members, get together and kind of save yourself. That was basically the slogan that the Chinese Communist Party had throughout the entire pandemic. But now they realized that they did a big mistake. I'm not sure whether that is the exact same reason behind this trouble, but right now they realize that if they don't print actually so much money, they will be in a much bigger trouble. But by doing that, they are taking another huge risk that could destroy the economy sometime in the future. But a lot of people say that printing so much money, like $300 billion, is not really enough to save the economy. That equals to 2.3 trillion yuan. 2.3 trillion yuan is the amount of money that the Chinese government plans to actually throw into the economy. Some economists claim that in order for China to save itself, it must print 10 trillion yuan. That's a lot of money, 10 trillion yuan. That equals to around $1.5 trillion. Now, when you compare that to what's happening in the United States, it doesn't look like a lot of money, because if you kind of see how much the United States printed money in 2020 and 2021, you will be blown away. But you have to understand that, first of all, China is not the United States. Secondly, Chinese economy is worth $18 trillion, while the US economy is worth $25 trillion. So automatically, just based on these very general numbers, the United States can print way more money than China or any other country. Now, secondly, the US currency is the global currency reserve. Most of that money will be flown out of the United States and will be used across the globe. They will be used in other central banks. A lot of other countries look at the United States and they're willing to buy US government bonds. And that's not the case with China. There are very few number of people who actually would buy Chinese government bonds. There are very few people who have faith in the Chinese Communist Party. There are few people who would actually keep the Chinese yuan as a currency reserve. And that's why when China needs to print so much money, like $1.5 trillion, it's a real disaster for the Chinese economy. It can turn China into a hyperinflation country, which is something they don't really want. But on the other side, they probably don't really have that much option. And that's why, based on what we see over here, is that China will at least be throwing $40 billion into the Chinese stock market over the next couple of weeks, over the next couple of months. Probably the stimulus package will continue to 2025, maybe middle of 2025, maybe in January or February next year, they will announce another package. Another reason that made them so desperate to do something like that is because they have to hit a 5% GDP growth for this year. And according to a lot of data, that's not happening. And even if China tries its best, because you see, there is a very social contract between the Chinese people and the Chinese Communist Party. They will take out their freedoms, but at the expense that the economy is going to grow to a certain extent. And China is playing the long game. They want to overthrow the United States as the most powerful country in the world. Look at what's happening with their military. They're spending hundreds of billions of dollars. They've grown their military budget to the point now that it actually matches like 50 or 60% of the US budget. Of course, they're still far away from actually competing with the United States, but nonetheless, just 30 years ago, that was not the case. 30 years ago, China would spend like pennies on their military. Today, they're the second most powerful country in the world, most likely. Now, that actually leads you to ask yourself a very basic, simple question. Why? What is the big deal with the economy that you are willing to sacrifice everything and probably cause hyperinflation in your country, that you want to spend $1.5 trillion to throw it into the economy? Like, what exactly is happening with your economy? What is so bad about it? And the answer is very simple and straightforward. Now, this chart explains everything. If you take a look at the United States, like, the US has an absolutely opposite problem. The United States is suffering from the problem that we have too much high inflation. Inflation got out of control, and that's all because the Fed printed so much money. And a lot of people are worried, like, what should I do with my money? Prices are going all out of control. I can't afford. Like, even people who make like $100,000, these are the people who are complaining. And guess what? There's like less than 20% of the entire population of the United States that makes $100,000. So if people who make 100K are complaining about prices and can't really afford their lifestyles, what do you think is happening to people who make 60K, 70K? I'm not even talking about the people who make anything below $50,000 a year. They are literally living in poverty. Now, China has an absolute opposite problem. Now, I'm not saying that everybody in China is living a very lavish lifestyle, but in China, inflation is not growing at all. Look at the data. For instance, if you go back to 2020, inflation was around, now let me change that because it won't really look that nice. If you just go back to 2022, for example, inflation was somehow around 2%. Yes, sometimes it was lower than 2%, was closer to 1%, even less than 1%. Sometimes it was 2%, over 2%, but overall it was around 2%, which is very normal. Guess what happens next? It goes down dramatically, and we have in 2024 and even 2023 some months or quarters when inflation is negative. It's like literally negative 0.8% or something like that. And that creates a deflationary environment in the economy. And that is way more dangerous than your usual inflation. Because when you have deflation environment, the economy does not grow at all. You see, the economy, when you have a capitalistic system, that is the case with most of the world today, it grows when people spend money. If people stop spending money, the economy simply does not grow. So it's very important that the people actually spend money. You don't want to have a nation of savers. Yes, for you personally, it's great to save your money, grow your wealth to a certain extent. But for the economy, what we want in the economy is that people take money, people spend money. People take money, people spend money. And people only spend money when they have confidence in the economy. And that's why when they say that inflation is bad, but if you don't have inflation at all, that's even worse because the economy won't grow at all. You want to have a decent rate of 2% inflation rate for your economy to grow to a certain extent. So if China wants to have a 2% inflation rate, it can forget about its ambitious imperialistic plans to ever overtake the United States as the largest economy out there. And let's take a look at what's happening to the consumer confidence in China. You see, what if I tell you today that tomorrow the stock market is going to collapse, and I will just give you some facts. Let's just say I will just get you some papers or documents from the White House, some secret service out there that will confirm to you that next week there will be a total collapse of the stock market. And now I'm going to ask you a very simple question when you know this fact. Are you going to buy stocks? Well, most likely you won't. I mean, best case scenario, you will short the stocks, right? You're not going to put your money into the stocks and buy those stocks. And the reason for that is very simple, because you're not confident about the economy. You're not confident about the stock. You're not confident about everything that's going to happen. And that's why the most important thing to drive your economy forward is the confidence of consumers in the economy. When people feel confident that the economy is going to grow, what are they going to do? They will use their savings. They will buy the new iPhone. When people are confident that the economy will grow, what are they going to do? They will borrow money, buy another house. When they're confident, they will take a loan and open a business. Basically, the more confidence there is in people about the economy, the more money they will spend and the more the economy will grow. And vice versa. When people are not confident about the economy, when people are not confident about the future of their country, when people are not confident about the stock market, people will stop spending and the economy will just stagnate or at least stay where it has always been. And that's why if you take a look at the data that I have right in front of me, consumer confidence was around 114 throughout, I would say, the last 3 decades. Sometimes it has fallen, sometimes it has increased, especially if you go back to 2018, it has increased dramatically, you can say. Even at the peak of the pandemic, it had fallen slightly, as you can see clearly here, but it has also grown, and it's very clear in this chart. But something happens in 2022 that consumer confidence just falls dramatically to less than 90. And I believe at this point it's around like 85. And that is extremely low. This is the lowest point that consumer confidence has gone in China in the last like 30 or 40 or probably even 50 years. And that's why people are not spending money. And that's why people are afraid to spend money. And that's why the economy is not growing. So inflation as of September 2024 in China has grown by 0.4%. This is extremely low. You need at least 2%, but you have in the fact 0.4%. And that raises a very different question. Like, why exactly consumer confidence is so low in China? Why China can't force its people to actually start spending money? There are a lot of reasons behind it, but one of the fundamental and main reason is the real estate market. You see, in every single economy, you always have, like, especially in a developing economy, like, for example, China or any other country that is developing and hasn't reached a GDP of like $30,000, $40,000 per capita, you have a sector that is driving the economy forward. Like in China, of course, it has turned itself into the global factory of the world and was exporting literally everything. But the main, or one of the probably main industries has been the real estate market, because people in China would make a lot of money. And what do you think they will do with all of their savings? They will go and buy a property, which is a very natural thing to do. You want to buy a house because a house is, or a property is, the best way to preserve your wealth. Most importantly, you can rent it to someone else and you can generate interest, and even you can generate rental income. And later on, you can actually sell it because it preserves its wealth. It preserves its value over time. In fact, if you take a look at the numbers, usually, often, house prices rise in value. And that is the most important thing. That is what Chinese people used to have in mind. That is the normal thing that a lot of people in the US and all across the globe are having. But look at what's happening to the prices of the houses in China. They have been growing since 2006, but something fundamental happens over here and house prices collapse catastrophically and they're going down. It's very clear in this chart. And I don't even know how far they will actually go down. They can actually collapse. And the reason behind that is very simple. There are 80 million houses in China that are empty right now. And guess what? Because for the last 30 years, China, what led to the growth of China's GDP was that it was building. When you build a house, everybody is making money. The bank is making money. The developer is making money. The government is making money. Like, everybody is making money. So they realized that the more they build, the faster the economy is going to grow and the bigger the Chinese economy is going to grow. And they ended up building extra 80 million homes that they cannot fill. And you have to understand that it's not just some random country out there. Just up until recently, it was the country with the largest population in the world, with 1.5 billion people. And even with 1.5 billion people, they could not possibly fill all of those houses. And now imagine you have a market with 80 million extra houses. What are you going to do? House prices are going down because no one is renting them and no one is buying them. No one wants to buy them. And that's why back in 2021 or 2022, we had some of the largest developers in China filing for bankruptcy: Evergrande, Country Garden, and probably a few others, because the market has turned into a bubble. And now the bubble hasn't burst yet. A lot of people know how bad the situation is because the bubble, or the real estate market, has been actually taken care by the government. If the government packages stop flowing into the real estate market, it can actually collapse. And that's why, beside those stimulus checks that you have seen, do you know what the government has done? They started actually lowering down the down payment to buy a house. They started lowering down mortgage rates in order to encourage people to keep buying those houses so that the economy grows. In the United States, for example, the real estate market represents around 15% of the GDP of the country. But in China, it represents 30% of the GDP. Now, back in 2008, something similar happened to the United States. And when the bubble burst, we all know what happened. So China does not want to repeat something like that. China understands the dangers, and that's why it's trying to save its economy. And the fact that it represents almost 30% of its GDP, it actually makes the situation even worse. Now, you might ask yourself a simple question. Why aren't Chinese people investing in the stock market? Why do they always keep their money, for example, in a place like the real estate? And the problem is that China's stock market is absolutely broken. In the United States, the government doesn't really much interfere with the economy. For example, if Tim Cook tomorrow says something against the Joe Biden or any other president of the United States, he won't end up in prison. He won't be kidnapped. But when something like that is actually done by a popular Chinese entrepreneur, he can be kidnapped, just like it happened with Jack Ma. So because when you are trying to analyze a company in the United States, you can actually take a look at the balance sheet. You can do different valuation strategies. You can understand, where the where the company is going to, you can analyze the economy, and you can draw some factors out there and draw some really good conclusions. But you never know when the government is going to intervene in China with that particular company and will overtake its CEO and close its IPO, and that will be the end of that company. Even though that everything on paper is great, the balance sheets are strong, the company is strong, but because the CEO of the company didn't find a common language with the Communist Party, it's the end of the company. Because you cannot predict something like that, it's very risky to invest in those companies. Another problem we have is the geopolitical factors. Because of the tensions that are happening with the United States and Taiwan, people don't know what to expect. What if there is a war? What if there is a serious conflict? What's going to happen with the Chinese economy? Will there be sanctions? How will the sanctions affect the global economy? How will the sanctions impact China? And because of that, a lot of international companies are leaving China right now, and they're trying to diversify their logistics. They're trying to diversify their factories. They're pushing some of their factories to India, to Vietnam, and other Southeast Asian countries. So a lot of money is flowing out of China, which is slowing down the growth again and literally contributing to that deflationary environment that we just talked about. The biggest fear that the Chinese government has at this point is that it's afraid of situation like it happened with Japan. Now, I'm not talking about the situation that happened back in 1930s and 40s when this little Japan overtook the entire China. I'm still wondering how on earth a tiny country like Japan, I mean, it's not a tiny country, it's pretty large, but how on earth does Japan back in World War II took over half of China? That is really interesting, right? But we have an entirely different situation. If you go back to 1960s and 70s, Japan was going through the exact same growth that China has been going the last 50 years. And Japan was basically exporting cars, exporting electronics at a much cheaper price, and were exporting them to the United States and overtook the US auto industry. Especially when we had the oil embargo back in 1980s, when oil prices rose to the roof, it was much more profitable and comfortable and affordable to people to buy a Toyota and a Honda because they were much more fuel efficient compared to GM or Chevrolet or any other of those American cars out there. And the Japanese economy grew to the point where back in 1980s, everybody thought that Japan is going to overtake the United States as the largest economy in the world, and tension began to rise. And then the Japanese economy turned into a bubble, and that bubble burst. No matter what the Japanese government did at that point, it couldn't actually save the economy. And if you look at the data, you will clearly realize that it has been the last year when the Japanese government or the economy had its peak. It almost reached a $6 trillion valuation, but then since then you can say that the GDP of Japan has fallen down to $4.2 trillion. So 30 years of no growth at all. And that's because it is still experiencing a problem with the deflationary mindset. And the previous prime minister of Japan did everything possible. They tried to pump the economy with lots of debt, but it wasn't really helpful in any form or shape. And up until now, Japan is suffering. So China on one side, they want to overtake over the Taiwan, and China wants to have these imperial ambitions to dominate at least Southeast Asia and have this and compete with the United States on the global stage. Guess what happens if the Chinese economy is not going to grow for the next 30 years? Chinese GDP right now is like $18 trillion. If they experience something like Japan and won't grow for the next 30 years, US economy will probably reach like $45 trillion and will be twice the size of China's economy. That's not something China wants. China wants to compete. China wants to be at the top. And that's why China is afraid that they have built big enough bubble, just like in Japan, and it would actually lead that will actually stop the growth of the Chinese economy. So that leads us to a very simple question. Should you actually buy Chinese stocks, even though that the growth has been dramatic? Like 25% increase in such a short period of time is really a lot, to be honest. And there is a small dip out there, but I think it is going to keep growing for some time, at least until the money is flowing by the Chinese government into the economy and particularly into the stock market. Well, in the short run, I think the stocks are going to grow to a certain extent. That is very normal because you have money flowing in. But over the long run, I wouldn't really actually risk my money buying those stocks in the first place, because again, it's unclear. I'm not saying that China will fail 100%. Now, China might solve its problem. China might grow again by 5-6%. China might have another chance to actually compete with the United States and literally grow its economy and GDP to as much as the United States does. But again, the situation that we have in front of us is so difficult and so severe that it's very, very difficult to actually make any kind of predictions. And we don't know how will the stimulus that has been sent by the Chinese government will impact the economy. So they know that they have created a bubble in the real estate market. Now the question is that, will all of those extra stimulus checks that the government is pumping into the economy, what will they do to the economy? What if they actually, logically, if you think about it, they will just make the bubble that we have even bigger. And maybe one day, maybe not this year, maybe not next year, but in a couple of years, that bubble will grow to the point where nothing else will actually help, and that bubble will burst, leading to the collapse of the entire economy. Or maybe on the other side, the Chinese Communist Party right now is trying to manage the economy in such a way where it will get back on track. And when it will get back on track on 5% growth rate annually, it will slowly start to diversify the economy back far away from the real estate market, and will try to actually push people to invest more in the stock market by getting out the government out of the stock market, by being more loyal to the entrepreneurs, or they will actually come up with some way. And I think that's basically the plan they have. But will that plan actually work? I can't really say for a fact right now, but we'll actually keep watching and see what actually happens. Thanks guys for watching, and I will see you in the next one.